they've
Sure.
never gone up this much this quickly in such a short amount of time. And that right there presents a massive opportunity for people.
Longevity risk is the greatest risk of all. The longer you live, the more likely you are to hit market cycle volatility. Sequence of return risk comes into play.
But we want to enjoy and maximize the best years of our retirement. We don't want to sacrifice the good years just to save all this money for the end.
It's going to help you be healthier. It's going to help take the stress off. You just have more peace of mind.
They have a much more meaningful legacy that's going to be left tax-free, and their cash flow is going to be higher and locked in.
Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and I am here with Daniel Romberg, and we are going to be talking about some annuity stuff, some GUL stuff. We're going to be talking about really optimizing our retirements. One of the things I think is really interesting. I always love talking to Danny. We were just talking about this a little bit before getting going here. I always love getting on the phone with this guy. We haven't talked in a couple of months now, and I swear every time I talk to him, he's like, "Dude, you got to check this out. Like this thing, this industry, like these products are back." Like, and he's telling me all this stuff, and I'm like, "Oh my God!" Like I didn't even realize how good it was right now. And I think the thing I love about what we do, Danny, is it's the only way that you can actually have a financial plan, financial strategy that will guarantee a result. You have to utilize the products and tools that we talk about, right? And I think it's important to understand that. But I think usually when you look in the past, when you think about guarantees and you think about trying to get those guarantees, it's always the compromise is that you can't get as much for it. The guarantees come at a cost, right?
Right.
And so right now we're able to, because of the interest rate environment, which I don't know if it's going to be this way for long, right? I would argue maybe it's not going to be this way for long. If you look at the European Central Bank just cut rates, the Canadian Central Bank is cutting rates. Everybody says Jerome Powell is going to cut rates in the U.S., and that's a whole different video on its own, right? Yep. But if rates start getting cut, all the things we talk about have a potential to be impacted, but you can actually lock these things in at multi-decade highs for interest rates and lock this in, and that it creates an opportunity. So I say all this at the beginning just to let everybody know, like this, if you're, what do you say, 65 plus, 60 plus?
Yeah, 60 plus.
If you're 60 plus and you're watching this, this might be one of the most important videos when it comes to optimizing your retirement planning and optimizing your legacy strategy, what you want to pass on to the next generation. What if you could have both, right? Like, which most people feel like they got to kind of compromise. And so what I thought would be cool, Danny, because you were just sharing this, and I just want to kind of get right into it because that's what we do. Is talk about the example, the I'll say case study, but like the real world example that you just went through with somebody that was going through this, that they kind of were living their life and doing their stuff. And like what you just told me blew my mind about how you were able to optimize what they had going on.
It's pretty cool, Chris. I'm really excited about what's happening right now. So just to give a little, I will answer your question and go through the whole case study, but just to give a little background for anybody who doesn't know me, I specialize in helping people with retirement. So you wrote a great book called Cashflow Hacking. I feel like cash flow is like a huge part of what I do every day to help secure people's retirement. And this is a really unique cash flow idea that I'm really excited about. And what's really amazing, like you just touched on with these interest rates, obviously we know when they start tapering and bringing rates down, that's healthy for the economy. We should see some really positive things from that for a lot of people. But I just worked through an entire decade of basically no interest rates, right? Like we had a
historically low interest rates.
Historically low, like just absolutely pretty much like nothing, right? Very, very low. So I remember in 2015, we ran an ad in the newspaper here in Arizona for an annuity that paid 1%. And people were calling and coming in to get this annuity that paid. I mean, that's the reality of what we just came from. So, now the interest rates have gone up so much so fast. They've been higher in different periods of US history, but they've never gone up this much this quickly in such a short amount of time. And that right there presents a massive opportunity for people. And I think the goal of this would be not necessarily to say, hey, let's paint this great picture of a case study, but really to show people a framework to look at these interest rates as this inflation can present a massive opportunity where if you strike, it could benefit you for the rest of your life. So I'll break down that case study because this one's kind of interesting and this is what I'm excited about. It takes two products and puts them together kind of like a puzzle piece, right? Like two puzzle pieces fitting together perfectly. And the two products are joint lifetime income annuities and survivorship life insurance. And that's what I was really excited about and wanted to call you to do this video today. It was about survivorship life because the interest rate environment and what we're seeing right now in survivorship life side is incredible, like the leverage you can get. So just to break it down for people who don't know these two products, right? So that way they can have an understanding when we go to build the framework for the case study. A joint lifetime income annuity is going to be an annuity that's going to give you a contractually guaranteed stream of lifetime income payments that'll pay you and your spouse for as long as either one of you live. Basically like a pension-like income. Even if you run out of money, you're still going to get that income. That's what the joint lifetime income annuity does. The survivorship life policy is also referred to as second to die. And when they insure two lives, what you can do is you can basically say, okay, I want to pay this premium. And as long as I pay that premium on time, I want the company to guarantee this death benefit to a certain age, regardless of performance of the policy. So this is not a cash value play. This is like the opposite, right? We're going purely for death benefit. There's actually very little or no cash value design in these policies. But what happens is you can literally pick your guarantee age and lock in a low premium and get a lot of leverage because they're insuring two lives. You can actually get a much higher benefit for lower mortality costs for the company. So what happened was I had these clients and they were real estate investors their whole career. So they had properties. And they wanted to sell one of their properties because they were getting up to close to their 70s. And they just didn't want the headache of it, the management of it. They just wanted the cash flow from it. And their primary goals were, hey, I want to make sure I can provide income for me in my retirement and then leave this asset to my kids. That was it. Okay. When we ran the cash flow on their current property, it was free and clear. It was a little over 300,000. They were making about 5% on this thing. Okay. Now, you could say, well, how are they only making 5%, right? Could they have raised rents? Yes. But again, there's things that happen with rentals you have to consider, right? There's repairs, there's vacancy rates, you know, there's a cost to these rentals. There's management costs sometimes. So they were netting about 5% income off this 300,000 or about 15 grand a year, right?
Okay. Yep.
So they sold it and they said, okay, well, what can we do? We're thinking about going and getting a CD at 5%, right? Because you can go put it at the bank. The bank will give you a guarantee. You can get a 5% interest rate for a year, and that pretty much replaces their rental. The problem with that is exactly what you said in the beginning of this video. We don't know what interest rates are going to do over their retirement. So a 1-year 5% CD today is great, but if we go into a declining interest rate environment over the next 10 to 15 years, now we're at a race to the bottom again. So where do you get your interest rate with the same level of principal preservation for the kids? You have to start going less and less on your cash flow. So what we did was we said, okay, well, if you could qualify for a survivorship life policy and we took that 300 grand and put it in a joint lifetime income annuity, the distribution rate, the payout rate, not what they're earning, but the amount that the annuity was going to pay out after 12 months was right about 9%. And that's crazy right there. Like that's a very high payout rate.
That's a huge number.
That's a huge number for a joint lifetime income annuity. Insane, right?
Yeah.
So what's cool about that is, yes, you're going to get that lifetime income locked in. But the problem is that only satisfies one of their goals, Chris, because they're going to get higher cash flow than they were getting previously, but it's going to spend through all the money. There won't be anything left for their kids.
Nothing left.
So if they can qualify for survivorship life, we can take 2% of that payment and send it to the survivorship life. Now, what's cool about that is that not only replaced all of the money for the 300,000, but actually was almost double, if they qualified at preferred rates, was almost double the $300,000. So now they have a much more meaningful legacy that's going to be left tax-free, and their cash flow is going to be higher and locked in for the next however long they live.
And it's guaranteed.
The company guarantees the payment. The company guarantees the death benefit. So there's none of that is ran on performance. That is literally just the company saying, this is what we can absolutely do. We didn't even look at the current assumptions. There was no need to. It was, it's just locked in at those rates, doing exactly what they want. It's a different way to get there.
Yeah.
But overall, if you can think like that and put something together with your team, it has a massive impact on both the cash flow and the legacy piece for their family.
I mean, that's amazing because, like, if you think, I mean, what you just said, you're taking, first of all, 5% rates right now,
Yeah.
like, historically speaking, you know, when I say historically, I mean like the past 15 years or so, right?
Right.
Like, those are the best rates that we've seen
Yeah.
anywhere. And so to be able to like lock that in, if you know anything about Monte Carlo simulations and the 4% rule and all this stuff, you understand that even locking in 5% is amazing. But what Danny just said was like, at 5% right now, that's great. But what happens? Like a lot of people, like the MIGA business, we talked about this a bit, you know, on some
Mhm.
videos.
Yeah.
The MIGA business has gotten back around. It's become popular, but typically that's like 1 to 3, maybe 5 years that you get to lock that in. And that's
Hmm.
great for a window in time. But what happens if at the end of that, rates go down? You know, then you could be faced to figure out different solution to a new problem, right? Because like
Right.
now, if this MIGA and the interest rate has, you know, and that 5% cash flow has helped you, but then 5 years from now, 3 years from now, interest rates are now 2.5% or 3%, and now you have the same cash flow need, or probably even a little bit higher of a cash flow need due
Right.
to inflation, you
Yeah.
know, then that's something to take into consideration. So the ability to lock this in for the
Hmm.
period of your life, I think is, first of all, anytime we could do that, like I said earlier, usually that comes at a cost, right?
Right.
Now, full transparency, what is the cost here? It is you're giving up liquidity of this big lump sum of money, and you're exchanging that liquidity of if you had $500,000 or $1 million or whatever that number is, you're
Yep.
exchanging the liquidity for the guaranteed cash flow for you and your spouse for the rest of your life, right? I mean, that's really
Yeah.
what it comes down to.
That is 100% the cost is you do not have the liquidity to pivot if you decide to change your mind or do something
Right.
different. You're making a commitment here.
Yep.
Now, I will say this though. Okay, here's what's interesting. Let's say you don't want to leave as big of a legacy. What if you just wanted to
Sure.
replace the 300, or what if down the road you wanted to adjust
Take
it
higher.
and cut that down? Say, you know
Yeah.
what? We'll leave the kids 150. We
Yeah.
want to increase our cash flow,
Sure.
and take another percent out. So there's
You could do that.
abilities to maneuver that still and keep it in a level where
Well,
you can adjust it, but you won't have
yeah.
access to the whole 300. That's 100% correct.
Yeah, I mean, it's just math, right? So it's
Right.
just about optimization and understanding what do you want to accomplish, and then you can work the numbers. And when you're dealing with a 9% number as the base compared
Crazy.
to anything else, like you're not going to find anything that competes with that, right? Like it's just to be able to do that. And then if I think the key here is at 69 and 70, like you said, or 65 or 60, is
Yeah.
that you have to be insurable. And as we start to age, a lot of times people's insurability and preferred ratings can, you know, be more challenging to achieve.
Yeah.
But I think it's absolutely, my mindset is leave no stone unturned, look into it. Doesn't cost anything to go through underwriting. It doesn't cost anything to look into getting illustrations and getting planning done and seeing. And when I say illustrations, I'm not talking about the hyped up illustrations that a lot of people like to sell online. I'm talking about looking at the guaranteed results that these companies will give to you,
Yeah.
you know, for what your objectives are. When I think about the ability to lock in what, I mean, in Daniel's example here, you're talking about guaranteeing a 7% cash flow and then taking 2% extra and using that to pay a legacy plan. And so, I mean, I could tell you 3 years ago, you couldn't find anything that would pay 4.5, 5% on a
Yeah.
guaranteed basis. So to be able to
Very
get
hard.
both right now, if you have any resources, any capital, if you're getting into retirement and you've got money in like a 401k and you're looking to roll it over, if you've got any money anywhere that you're kind of like just being like, all right, I'm sitting on this cash, I'm trying to think about how am I going to make this work for the rest of my life. That is the risk. We talk about these risks all the time. The reality is longevity risk is the greatest risk of all. The longer you live, the more likely you are to hit market cycle volatility. Sequence of return risk comes into play. Your
Mhm.
health risk comes into play. There's all these things that you can kind of take off the table by just guaranteeing a result. And you just have to ask yourself, what is the balance of what you need out of the resources that you have to be able
Yeah.
to at least get you maybe lock in a guaranteed income stream of at least what it's going to be, what would that something an amount that will secure your lifestyle, right? Does that make sense?
Yeah, whatever makes the most sense. And Chris, you touched on these retirement risks. Interest rate risk has
Oh, it's
plagued
huge.
retirement savers for a long, long time.
Yeah.
So I'm not saying that those percentages and those numbers would be applicable to anybody watching this video. That was for that one specific example. But what I
Yeah.
am saying is this is a way to make the inflation work for you. Everybody's complaining about the prices at the grocery store, and it's hard, right? We're not used to
Yep.
the adjustment yet.
Yep.
But this is a way to take advantage of that for your retirement and flip it back the other
Okay.
way. And I'm going to throw in two more bonuses for you, Chris, because I
Nice.
love you and I want to share this with you. So
Nice.
survivorship life, if we can just stay on this for just one more second, I'll throw in two more use cases that this is amazing because you touched on 401ks, right?
Yep.
Nobody does the math of the cost of their deductions.
Mm.
So everybody's like 401k contribution, which is fine. That's how you build wealth for retirement for a lot of people. That's
Sure.
okay. But when you go to look at that big number one day and someone's sitting there with 700,000 in a 401k or a combination of 401ks and IRAs, and they go, oh, well, hey, if I take 5% income, this will be what's left for my kids. They never look at what's really going to be left for the kids. They never do the math on the after tax for them to actually get the money.
Yep.
So where I've had a lot of success in helping wealthier individuals and retirees and just everybody is saying, hey, you know what if we just carved off like 1% of the interest from this 401k and use survivorship life? That way we could actually give them a large windfall of money that would be able to offset the taxes or leave them the net amount you actually intended to when you're looking at your retirement savings. That's another great use
I love
case
it.
for helping because it's a wealth transfer tool. That's what it does. That's what it's supposed to do. The other thing that I love is, let's say you don't have any use case for the annuity, but you say, okay, you know what? We know that it's within our heart to leave our kids or grandkids or somebody, an organization, something, but we want to enjoy and maximize the best years of our retirement, right? Like we don't want to sacrifice the good years just to save all this money for the end. Like, we won't even be here to see them enjoy it.
Yeah.
What a lot of couples are doing now really successfully is they're getting intentional, Chris. They're saying, okay, well, what if we did a 10 pay? What if we said, okay, we want to make sure the kids get 500 grand. Cool. Let's 10 pay an SGUL. Set aside that money right now. That gives you the freedom and the permission to spend and enjoy the rest of your life. You can get really, really intentional with this process and just figure it out up front and just give yourself so much freedom to enjoy. It's amazing. Yeah.
That is, I mean, like that alone, man, I truly believe, and I've done videos on this before, but I think that right there will not just lead to, it's not just better financial practice, but I think it's a better health practice, because I think that the energy and the stress around money when people get into retirement age, and now that you're constantly trying to balance, should we take this vacation? Should we spend the money on the remodel for the house? Should we do this? Because you're worried, like every time you spend money and you're not making money, especially if the market's not going gangbusters, you're looking at your accounts kind of dwindle, and it shouldn't feel this way, but typically speaking, grandparents now have grandkids and they have their own kids, and now they're thinking from a legacy perspective. That's why I can't stand all the people that are like, oh, you don't need life insurance when you're in retirement. It's like, I promise you, I go talk to an 85 or 90-year-old who's on their deathbed and they're going to die within 24 hours and ask them if they wish they had life insurance. I promise you that what they'll say, And so, but when we look at this, it's like, it's going to help you be healthier, right? It's going to help take the stress off. It's going to help you just have more peace of mind around your ability to be like, not worried about spending down the resources that you've worked so hard for, because you know that no matter what happens, I call it gamifying life, because I talk to a lot of builders, you talk to a lot more retirees, right? But like, I think about it as gamifying life, because if even in retirement, I also believe, and this isn't for everybody, but I just believe we need to gamify. Life is a game. Life is an adventure. If we're not, as soon as we lose that mindset, that's when we actually start to die faster, And what I would say is that by doing this, it guarantees a result. And so then therefore you don't have to be stressed out, because no matter what happens, no matter what you spend, if you make a mistake, if you spend too much or whatever, and it impacts your life, you're not going to have that guilt about like, how's it impacting the next generations, which is just magical in a lot of ways, And so to me, like the people, and granted, it's not for everybody, but if you care about the next generation, it's for you, if you care about creating a very specific guaranteed result, and you're wondering how to do it, well, that's what I was saying at the beginning. Like, this is the only way to optimize it. Not necessarily just this specific strategy, but
Sure.
utilizing these types of tools, right? I'm
Yeah.
saying I really implore everybody or encourage everybody to think deeply about, what are your resources? Start with the end in mind. What do you want your legacy to be? And if you have that legacy in mind, whatever the number is, whatever the desired objective or goal is for your kids or your grandkids or whatever it is to you, the community organizations that you care about, whatever that looks like to you, like, think about how you can accomplish that. Think about, like, how to leverage your resources to be able to accomplish that desired result. I always say, make sure what you want to happen, when you want it to happen, whether you're here to see it or not, right?
100%.
Period.
And Chris, it's not just for the next generation, right? It is for them, but it's also for you too. Like you said, if
Mhm.
you can just,
Oh,
people
totally.
think that life insurance and long-term care can be burdens in retirement, when in actuality, they don't realize the freedom that they create. My clients that have taken me up on it and said, okay, you know what? I'm going to have something in place, a plan for long-term care, and I'm going to set aside my legacy. They
Mhm.
have all this freedom where they go, wow, now I can fully enjoy
Yeah, man.
this savings for me and maximize it. And that's, to me, that's what it's all about.
I love it, man. I love it. Well, guys, if you have any questions about this at all, I think this video is going to go live on Life 180's channel and Danny's channel. And so I would say, go down in the link in the description below and just set up a call, whether it's for you or your parents or somebody. If you're kind of hitting that stage of life and you just want kind of a no pressure. And I will say that genuinely, like, I know for us, all of our clarity calls, we call them clarity calls for a reason.
Yeah.
We just want to answer questions, get to know you, and figure out kind of where you are on this path, and answer any questions that you have, so you can make an educated decision for yourself. That's it. And I know Danny operates the same way. That's why I have him on the channel so often. It's all about just making an educated decision. You going through the process of that education to truly understand what it looks like, while you're on this path, while you're alive. Maybe, hopefully, if you're 60, for the next 30 plus years, right? Like, that's a long time to be
Yeah.
alive and spending money and not making money. Think about it that way. You're like, if you are married right now and you're 65 and your spouse is 65, there's a good chance that you're going to be alive in retirement, not making money almost as long as you worked your career. Think, like, that's kind of crazy to think about,
Yeah.
isn't it? Like,
It's mind blowing.
it's mind blowing to think
Yeah.
about, but it's the math, it's the reality. So you gotta figure out a solution to do this. And what we're talking about right now, being able to lock in these historic rates, as far as people, right now, I mean, I guess if you're 65, you started your career probably the last time the rates were really high. So you've had this whole cycle of rates going down and down and down, and now you get to, like, they came back up. You have the opportunity to capture them and lock them in.
Yeah.
And granted, nobody knows where they're going to go, but I will say, people right now, there's a window in time right now that we don't know how long this door is going to be open to be able to do this. I really encourage people to at least see what it could look like and lock in this result for themselves and take advantage of it. Because if rates go down in 6 months, 8 months, maybe 2 months, as Jerome Powell starts reducing the federal funds rate and stuff like that, these companies react very quickly. The rates start to drop very quickly. But once you lock them in, they can't reduce them on you after the fact. That's the beauty of it, right? And so, I mean, they can in certain products, but not the ones we're talking about, right? And so
Yeah.
that's the biggest deal. So if you have any questions, set up a call down in the link in the description below. I really just encourage it. No harm, no foul to go through that process. But hopefully everybody found value in this. If you did, please like it, share it, get it out there, subscribe. If you're on the Life 180 channel, I'm going to put a link down in the description below for Danny as well. So make sure you click on that link and you can go check out his channel. He's got amazing content that he creates on a weekly basis. I watch it all the time and get a lot out of the stuff that he creates. So it's awesome. And that's it. Got anything else, Danny?
No, thanks so much for having me, Chris. It's been awesome.
Yeah, man. Awesome. All right, guys. Until next time, have a blessed, inspirational day. We'll talk soon. See ya.